Think earning money while binge watching your favorite show sounds too good to be true? It probably is. Passive income isn't exactly a no-hands magic trick unless your idea of passive includes sleepless nights and a crash course in financial juggling. Ready for a reality check that's as eye-opening as it is laugh-worthy? The illusion of true passivity, a reality check. Passive income often conjures images of hammock-filled afternoons with zero worries, but the reality is far from that. While it's attractive to think that you could earn with little to no effort, most passive income streams require groundwork. Whether it's setting up a digital product, purchasing dividend stocks, or investing in real estate, the initial setup phase can be anything but passive. A survey revealed that over 70% of those pursuing passive income streams reported investing substantial time and resources upfront, debunking the myth of effortless wealth. Take, for example, setting up a successful online store. This involves market research, product sourcing, website development, and marketing. Sure, sales might become passive eventually, but before that point, entrepreneurs typically clock in hundreds of hours. The common thread? Passive income becomes passive after significant initial activity, similar to pushing a boulder uphill before it can roll down on its own. Dividend stocks, predictable but involves planning. Dividend stocks remain a favorite in 2024 for those looking to earn without active day-to-day management. Companies in utilities, finance, and technology sectors have been among the highest-paying dividends this year, some even reaching an average yield of 4 to 6%. While dividends do promise steady cash flow, seasoned investors will tell you that true passivity is a stretch. Managing a portfolio to maximize returns involves routine checks, market analysis, and sometimes reallocating funds to adapt to economic shifts. Think of dividend stock investment like planting a garden. You sow seeds, water them, monitor for weeds, and eventually they bloom. But that bloom depends on your continual attention and adjustments. Dividend stocks may require you to keep up with corporate performance to ensure your income remains consistent and profitable. The real estate investment trust's edge: real estate without landlord duties. For many, the idea of earning from real estate without the stress of being a landlord sounds perfect. Enter real estate investment trusts, or real estate investment trusts. Real estate investment trusts focusing on healthcare facilities, commercial properties, and data centers have been top performers, providing average yields of 5 to 8%. The appeal: they allow investors to earn from real estate without directly owning or managing the properties. However, not all real estate investment trusts are created equal. Savvy investors need to study a real estate investment trust's portfolio, management, and financials. And just like with stocks, regular review and portfolio balancing are part of the game. Though real estate investment trusts might seem hands-off, informed investment decisions are anything but. Digital products: the new intellectual gold rush. Digital products, from e-books to comprehensive online courses, have become a significant revenue source. Creators in niche markets like coding tutorials, self-help, and finance courses have reported impressive sales figures, with some generating over $100,000 annually. Once a digital product is created, it can indeed generate income repeatedly without new input. But here's the kicker: getting there is no small feat. Creating a high-quality course involves research, content creation, video recording, editing, and a well-thought-out marketing strategy. The upfront time commitment can range from weeks to months. After launch, continuous efforts in marketing, responding to customer feedback, and updating content are needed to maintain relevance. It's a golden egg that demands periodic polishing. Affiliate marketing, where influence meets income. Affiliate marketing remains a cornerstone of the influencer economy. Platforms like TikTok, Instagram, and YouTube have made it easier than ever for content creators to promote products and earn commissions. The idea is simple: endorse a product and earn when someone buys through your link. But what many don't see behind the scenes is the strategic effort needed to maintain engagement. Successful affiliate marketers often spend hours crafting engaging, informative, and trust-building content. It's not just about posting a link, it's about positioning yourself as a credible voice in your niche. Data shows that the highest earning affiliates are those who strategically partner with brands that align with their content style and audience interests. The message: there's nothing passive about creating that foundation. Peer-to-peer lending, a risky yet rewarding role. If you're willing to take on a bit more risk for potentially high returns, peer-to-peer lending can be enticing. This year, platforms like Prosper and Lending Club have improved their models to better assess borrower risk, giving investors a clearer picture of potential gains. Interest rates for lenders in 2024 range from 6% to 12%, depending on the borrower's risk profile. However, the nature of P2P lending involves significant initial work. You need to vet potential borrowers and diversify your investments to safeguard against defaults. Even though your money works for you after the loan is made, this form of passive income requires vigilance to mitigate risks and maintain returns. The safeguard of high-yield savings accounts and CDs. For those who prioritize safety over aggressive returns, high-yield savings accounts and certificates of deposit continue to be solid options. With some banks offering yields up to 5% on medium-term certificates of deposit, these options are perfect for risk-averse investors. The upside? They are insured, low-risk, and predictable. The downside? Returns won't match the potential of more aggressive strategies like stocks or real estate. But for those who want a truly hands-off experience, this approach is as close as it gets to a set-it-and-forget-it model. Crowdfunding real estate. Collective wealth building. Real estate crowdfunding platforms such as Fundrise and RealtyMogul have democratized property investment, allowing everyday people to invest in larger commercial projects with relatively small capital. The trend in 2024 has shown average annual returns from these investments ranging from 8% to 10%, making them appealing alternatives to traditional real estate ownership. However, like all investments, it's not without caveats. These platforms often come with management fees, and the return of principal may be delayed depending on the project's success. Transparency is key, so investors must keep track of platform policies and fee structures. While you don't need to paint walls or manage tenants, staying informed about the projects you're invested in and understanding market trends are essential for long-term success. Additionally, diversifying across different property types or geographical locations can mitigate risks and enhance overall returns. Print on demand. Creativity as a cash machine. If you've got an eye for design, print-on-demand services can be a lucrative way to turn creativity into cash. The model is simple. Upload your designs, set prices, and the platform handles production, shipping, and customer service. Successful sellers in 2024 have tapped into niche trends, from custom pet portraits to themed apparel, allowing them to stand out in an increasingly crowded market. Yet, the print-on-demand game is not just about slapping a design on a shirt. To build sustainable passive income, consistent marketing, trend analysis, and customer engagement are required. The competition is fierce, so staying updated with design trends and seasonal themes can provide a competitive edge. While it becomes more hands-off after establishment, reaching that stage involves a considerable initial push, including collaborations and paid promotions to gain visibility. Hybrid strategies, the power play of diversification. Finally, the most robust passive income strategy isn't a single source, it's a diversified portfolio. Seasoned investors are combining income streams, dividend stocks, real estate investment trusts, digital products, and more. By diversifying, you protect against downturns in any one area and boost potential overall earnings. The key is strategic allocation. You might allocate 30% to dividend stocks, 20% to real estate investment trusts, 15% to a digital product venture, and 35% across other investments like crowdfunding or print-on-demand services. This mix reduces risk and provides a smoother, more consistent income flow. While the initial setup can be intense, the combination often results in a more resilient financial safety net, cushioning you against market volatility. Plus, with income coming from multiple sources, you can enjoy greater peace of mind, knowing your financial future is secured even if one stream slows down. Thanks for watching. If you found this video helpful, don't forget to hit that like button, subscribe for more content, and tap the bell icon so you never miss an update. See you in the next one. Stay inspired and keep pushing forward.